Oh my gosh, awesome. I have to say, thank you so much for taking the time to chat with me. I've been following your blog forever.
Oh,
Um,
thanks for asking.
yeah, absolutely. So I won't take up too much of your time because you're a
Okay.
very busy woman. For those that don't know how fabulous you are, can you share a little bit about your background and what you do for work?
Oh, sure. Well, I'm actually a tax attorney. That's kind of how I got started. I'm a tax attorney outside of Philadelphia. So we have lovely gray, rainy day today. And when I first started, I started in the estates department. I actually clerked with the IRS with their attorneys estates division, and then went into private practice. And then started the blog actually back in the day, long, long time ago. It was used to be called intoxicated rather than tax girl. And intoxicated is a word that was coined by the Washington Post, supposedly, that was to describe the elation that you feel on getting a refund until you realize it was your money to begin with. And so I used that was my blog for a while, but I couldn't get the domain, and so I actually switched back to Tax Girl, which is what I was called in law school. So that's kind of how it's been really interesting because I love the moniker. I know some women take umbrage with it because they feel like it's somehow diminutive or whatever, which I don't think so at all. I feel it's very empowering and I love it. And so I've been writing the blog for a while, and I did some work with AOL and a couple other folks, and then Forbes said, come write with us, and I said that would be awesome because they have a great tax team there, just terrific folks. So I've been doing that for about 2 years.
Awesome, awesome. And I have to say, I love Tax Girl. It's very, yeah, for those of us that are somewhat feel that area is daunting and a little bit overwhelming, it's welcoming. So I personally love it.
Thank you.
Yeah, absolutely. So, since it is busy tax season and I've been
Mhm.
following your A to Z on
Yep.
Forbes, yeah, can
Today
you tell us?
we're up to you today, just so you know.
Oh, we're up to you. Okay, because
Yeah, because
S,
yesterday was
student. Yesterday was T. Yes, and S, I want to talk a little bit about student loans. Maybe we should start
okay.
there first
Oh, sure.
because I had no idea that if your parents paid for it, you could still claim it. Maybe you could share a little bit about that.
Right. Well, there are some restrictions. So if folks are watching, they can go to the blog. It's taxes A to Z. S is for student loan interest. So you can just Google it and it'll pop right up on Forbes. But it's weird because there are very few. You have to ignore my dog in the background. I'm usually not home today, and my dog is snoring, believe it or not, in the background. So I apologize. Um, but there are very few places in the tax code where when someone else pays your legal obligation, you can claim the deduction, because usually the rule is you have to. One of the exceptions is student loans. And again, there are some rules. I think the idea is, that, well, especially with all the issues with student loans, because we collectively as a society owe over $1 billion or a trillion. I can't even remember now. It's pretty big in student loans. And actually, I'm going to check real quick while I'm talking about that because I feel like I should know that number. But we owe so much in student loans that they actually were trying to make the rules a little easier for students to claim the interest. So you can claim, if you pay it during the year, you can claim the interest, not the amount, not including the principal. The interest on student loans up to $2,500 is kind of your cap, or what you paid during the year. So if you only paid $1,000, you can claim $1,000. But if your parents pay the interest on a loan that's in your name, you can still, under certain circumstances, claim that interest because it was your legal obligation.
That is great to know. And so, if anyone wants more information, they should check your blog, the post, specifically for those circumstances, or is there another place that they should go to see if they fall into that category?
Right. And the other really interesting thing about student loans that I just want to point out that I think a lot of people fail to understand is most of my loans were through FIA and AES and Terry and like kind of the classic lenders, but you don't actually have to have a classic lender to claim the student loan interest deduction. You could even claim it credit cards. There's actually a number of lenders that would still allow you to claim student loan interest. Again, check out the entry because I have some of the disclaimers. Like one of the examples is you can't commingle on the credit card side. So you can't put like your Bloomingdale's purchases and then Temple Law School and then take the deduction. So you want to be really careful. Also, the same thing with like family loans, that kind of thing. So you want to be really careful about how those things are structured, but don't kind of get, into this kind of hole or kind of get pinned into this idea that it has to be, education services or FIA or one of those folks. There's actually a lot of lenders that still would allow you to claim the interest loan deduction.
Nice. That is so helpful and good to know. And right, I think it's $1 trillion that we're up to now.
Yeah, I just checked. Yeah.
So the mind-boggling number.
Good chunk of it's mine. Just so you know.
Well, that makes me feel better because I think the other chunk of it is mine. Nice. Cool. All right. Well, awesome. Let's jump into, for entrepreneurs specifically, if you're online based or any type of business that you're running and haven't done anything all year.
Okay.
Whereas, maybe you have an Excel spreadsheet, maybe you are kind of using a bookkeeping program, but for the most part, you haven't really looked at your numbers all year. What are some things in the next 11 days that you can do to make sure that you file accurately and on time?
Okay. Well, I think actually one of the things you said about filing on time, that's one of the things I want to focus on first. So I always say it's better to file a complete return on extension and an accurate return on extension than a really crappy, rushed together return on time. A lot of people feel like they have to hit that April 15 deadline because they're worried that they're an audit target or something if they don't file by that date. It's not true. So everybody is entitled to an automatic 6-month extension. If you file your extension request on time, you can get it online from IRS. You can even get it through TurboTax or whatever Tax Act, whatever software you're using. You have to get that extension request in by the 15th, so that has to be timely. But assuming that that's in on time, you get another 6 months to actually get your return done. So if you've done nothing all year, like nothing, maybe you just have a spreadsheet and you really, if you work for yourself, I work for myself, I get it. Like you're busy. You're not necessarily going to have 2 days to sit down and stare at all the paperwork and figure out where your receipts are and all that kind of stuff. If your option is throw it together and get it in by the 15th or be late, be late. Just file the extension so that the IRS expects you to be late. And the other thing to keep in mind is if you file that extension, the extension is an extension of the time to file, but not the time to pay. So if you think you're going to owe money, send a check in with the extension. And you can guess, obviously if you haven't looked at your numbers at all, that's going to be a pretty tough guess. But if you did it last year and you know that last year, you owed $1,200, send a check in for $1,200. Just, you don't want to ignore that because you'll get a failure to file penalty on top of any other penalty that you had. And so if you don't file and you don't pay, you'll get smacked with 2 penalties. And you don't want that to happen. So again, if you get the extension in on time, you won't get that failure to file penalty. And if you get the extension in on time and you make a payment, you won't get the failure to file penalty either. So these are good things. All of that said, what you want to start doing, I think most people actually report their income pretty accurately. I've been working in the business for a while. I think that especially, if you work for yourself, you know how much money is coming in the door. Like, And I think that very few people, the people that I write about on my blog being the exception, but very few people underreport their income on purpose. So I think most of the time people that are reporting their income are going to be pretty accurate. I think what self-employed people do and entrepreneurs do is they fail to report the number of deductions that they should claim. I actually think people underreport deductions rather than overreport. And I think a lot of it is record keeping. You know that you went to a restaurant, you know that you paid some dues, you can't find those receipts, so you just don't claim them. And I don't think that's good either. So again, when it goes back to if you need that extension, get the extension so you can put all of that stuff together and make sure that you're taking advantage of all the deductions. Especially remember if you're filing the Schedule C that you end up paying the self-employment tax on top of the income tax, so that's your FICA portion. So you definitely want that number to be as accurate as possible, because you're not just overpaying income tax, you're overpaying FICA, Social Security, and Medicare. So just be really, really careful about the numbers. Don't under-deduct. It's just one of those things I see most often when it comes to self-employed people, is just this, either, again, you don't have the records handy, so you skip it, or you get nervous and you think, what if I can't, what if I get audited? You're going to get audited, you're going to get audited. If you claim the extra magazine subscription, it's not going to make the difference. So, just make sure that you pay attention. And kind of along those lines, I guess one thing that I will say is this year there's the simplified home office deduction. I don't know if you are aware of this, or if folks who are watching are, but it used to be that the way you claimed your office deduction for your home office is that you had to add up the amount of square feet in your home office, add up the total amount of square feet in your apartment or your home, and then prorate things. So you prorate your rent, you prorate your mortgage, whatever it is that you prorate. And that can be really complicated and also time-consuming for people. So the IRS has a rule this year. You can actually claim a flat fee of $5 per square foot up to 300 square feet for your home office deduction. And you just say, like, this is my deduction. You're not going to prorate all these other things. This is my deduction. In some instances, you might have a smaller deduction this way, but if it's faster and easier and you don't have to come up with the receipts, it might be better for a lot of folks. If, however, it's a huge difference, don't go the easy way out. I mean, if you actually are entitled to claim $10,000 worth of expenses, don't limit yourself to $1,500. I mean, you don't, the tax code doesn't say that you have to pay more in tax than you have to pay. Like, there's nothing that says pay more. You pay what you have to pay, and that means you're entitled to all of your deductions.
That is really helpful. I did not know about the simplified home office.
That's new.
That's great. Yeah, and it's really easy. I can.
Oh, absolutely. Just make sure you calculate the square footage correctly. But that's the only thing you have to be able to show IRS, is that it is your home office, is bona fide home office, and that it really is 250 square feet or whatever it is you're claiming. That's
perfect. Thank you. So back to deductions, and yes, as an entrepreneur and the women that I work with, primarily women, it's very easy to just kind of overlook some deductions that you could possibly claim because you are scared of owing or being audited and then end up having to owe. So
right.
What are some specific deductions that you see that most entrepreneurs overlook?
Dues are a big one, actually. So I'm an attorney, and I pay bar dues every year, and it comes right out of my pocket. I don't have a big firm paying it. So I do work for my own firm, but same kind of thing, same kind of deal. So dues, so anything that you pay, like as a writer, if you subscribe to a writer's organization, any of these, women entrepreneurial groups, those kinds of things. So dues and subscriptions. Now, obviously, you can't deduct your subscription to L because you flip through it when you're bored, but you have to make sure that it's a trade or business expense, and that it's, it still meets the criteria for ordinary and necessary. But, magazines, dues, and subscriptions, I see a lot. I also see that gets ignored cell phones and second phone lines. Now, the IRS takes a pretty hard stance on phones. You have to be careful. The first thing you have to know is if it's a home office, even if you use your one landline for nothing else except your business, you can't claim it. IRS is constantly taking a position that a landline, a primary landline, is personal in nature. However, if you have a secondary line that is for your home office, absolutely claim it. Your cell phone, you want to make sure that you can keep really good records. If you are using your cell phone primarily for business, you occasionally call your mom. Just make sure that you somehow prorate that to show that it's 90% business and 10% personal. If it's actually 75% personal and 25% business, then maybe that's not a great expense for you to claim. You can still probably prorate a lot of those kinds of expenses, but you want to be careful. We always say, pigs get fed, hogs get slaughtered. So you don't want to be greedy. Like you want to claim, again, don't under-deduct, claim what you're entitled to, but don't think, I think sometimes people get carried away when they start digging for the deductions, and they're like, but I had that extra $20 phone call. Well, that extra $20 phone call, that's what gets you audited. That's ridiculous. But again, you don't want to not claim any of those expenses because you're worried. So cell phones, just be careful. Again, if they're primarily for business, just keep really good records. And cell phone records are super easy to look at. I mean, you can look and see. Like, my mom's in North Carolina. Most of my clients were in Pennsylvania. I can go right down my list and see when I'm on my mom. You know, so most people can figure that out. So those are two that I see a lot. Travel expenses, I think because people don't keep good records. I highly recommend don't pay cash when you go on vacation, not vacation, on business trips. Put everything on a credit or a debit card, because then if you can't find the receipt, you can at least do the annotated bill. And then you can see, I stayed at the Sheraton and it was $159, and I took a cab and it was $25. Because, you know, you get in the habit, especially things like cabs and subway fares and things that aren't, you know, the little things, they add up. If you go on a trip and you're at a convention and you take 5 cabs and it's $20 each, that's $100. You know, if you pay cash every single time, that's lost if you don't get a receipt, and nobody ever really gets a receipt. Or they give you the blank receipt and they say, here, you can fill it out, and then you never do. So just, again, travel expenses, keep really good records.
Perfect. Yeah, it sounds record keeping is key. So throughout the year, to possibly avoid, you know, having to go back and look through all of, you know, random credit card receipts and statements, what are some suggestions, maybe 2 or 3 things per month that someone could do to make sure that they are capturing all this information?
Well, I would say scan receipts, because people lose receipts. So scan receipts. If you don't have a scanner, and actually I have to give credit to one of my associates for this idea, Erica, because it was not my idea. Erica would take her cell phone and take pictures of receipts. That's super smart, like crazy smart, because you never delete photos off your cell phones, like even the bad ones.
Right. Even the bad ones. Exactly.
And depending on, you know, if it's an iPhone, you can sync it right to your computer and it shows up on iPhoto, and so all your receipts are there. So if it's an issue of trying to save receipts, highly recommend scanning receipts or taking photos on the iPhone. The other thing I recommend is, where I think sometimes people get lost, is they get overwhelmed in April. So, you know, take one Saturday a month and take 1 hour to enter in your income and your expenses into a QuickBooks or a FreshBooks or whatever it is that you're using, because I do think when you're really busy running your own business, you keep thinking, well, I'll do it next month, and then when you look at it, it's not 1 hour worth of work anymore. It's 10 hours worth of work, and that's a whole day, and you don't have the whole day, and, you know, and it just kind of gets compounded. So I would say, you know, make sure that you take an hour a month. What I actually ended up doing was hiring someone to do my books for me. And people joke about this with me all the time. I also don't do my own taxes, which is weird, because I used to do other people's taxes. I don't do my own anymore. And again, you have to kind of do the trade-off of how much time are you willing to devote. And as an attorney, I know what I bill per hour. And as much as it pains me to pay other people to do work that I know that I can do myself, if it takes me away from my business for 5 hours, that's 5 hours worth of lost revenue. I lose more money by not working than I am paying someone else to do their job, which they can actually do much more efficiently than me, because in addition to the fact that they do this all the time, they're not worried about the dogs in the corner, and they're not worried about taking the kids to field hockey and then, you know, answering the client calls and all that other stuff. So, you know, outsource your life when you can, and, you know, spend time on the stuff that really matters. And for most entrepreneurs, that's the fun stuff. It's why you went into business. Nobody went into business so they could do their taxes once a year. Unless you're a tax attorney.
Unless you're a tax attorney. And even then, you'll hire someone else to do it.
Exactly. Eventually, you'll have someone else.
I love it. I love that you say just take one Saturday per month, just 1 hour. It doesn't have to be a daily thing.
Oh, not at all, because you'd lose your mind. Yeah.
Yeah, it can be that simple. And just, you know, if you need a glass of wine or a green tea, just sit with it. And
a glass of wine helps. Depending on the month, that would help a lot.
I love it. Okay, cool. So,
depending could also be expensed.
Wait, what can?
I said depending could also be expensed. If you're working, depending on where you are and what you're doing, you can maybe write off the tea or the wine, or, you know, while you're doing it. So it's not lost necessarily.
That is good to know. I just got a bottle of Chardonnay, so that is something.
It's your bookkeeping Chardonnay. I mean, obviously, I'm joking a little bit because you want to be within reason, but, you know, if you don't have a home office and you go to the Starbucks once a month and you have it, and you're discussing business with someone who might be, your bookkeeper or whoever, that might be a deductible expense. So, again, I think people under-deduct rather than over-deduct. You don't want to overlook those potential expenses that might be able to be written off. Not everything can be written off, but some things can.
Yes. And I love that you brought home a really good point when you realize it gets to a point where if you outsource something, you are actually saving yourself time, not only time, but also money. Right. For someone that's thinking about getting a bookkeeper or thinking about hiring an accountant, is there, never clear cut, but is there something that they should consider, okay, yes, I am ready to outsource this work even though I can do it myself?
I don't know that there's like a number where you can like say, if you're making $10,000 a year, all of a sudden it makes sense. I think it's a lot of things. I think it's how much do you like doing bookkeeping? Some people actually like it. Some people like looking in the numbers and it gives them a sense of I'm doing really well right now and I like what I'm doing and I feel good about this. Not everybody is in that boat. If you hate it, if you absolutely hate it, why do it? You don't. It's funny to me because you don't cut your own hair. I mean, nobody cuts their own hair. Nobody. There's a lot of stuff that if you admit that you are not good at, like I used to cut my own bangs. I don't have bangs now for a reason. Like there are things that you should just know that if you're not good at or you don't enjoy it or it's not something you're comfortable doing yourself, you give away, no matter what the dollars are. I mean, it just is what it is. It's, you don't make souffles if you're not a souffle maker. So, I think it's important to stay engaged in your business, and you can't just say, I don't like the numbers, so I never want to know what's going on. Like, you're still signing the return. You still have to make sure that it all makes sense to you. But if you don't want to sit there and do the data entry, if you don't want to do your own taxes, that should be your first sign that you should get someone else, no matter what the dollars are. That said, if you sort of kind of think you can do it and you're just wondering, like, is it worth it? I don't know. It's very geographically specific and how many schedules you have and all of that kind of stuff. But you can usually count on your return being somewhere in the vicinity of like $200 to $500. If it's more complicated, it could get more expensive, but somewhere around there, assuming your ducks in a row and you're not giving someone a Samsonite full of receipts, like, it needs to be somewhat organized. But you're going to be looking somewhere around $200 to $500. Depending on what you're billing out, you kind of do the math in your head. How long is it going to take me to do this? And then what is going to be on my level of comfort that I'm doing this right? And then what is that worth to you? And if it's worth more than $200 or $500, then pay the $200 or $500, which is deductible. When you're paying, you deduct the fee that you're paying to have that done. So it's not even really $200 to $500. It's that less whatever your write-off is. So so I think you keep that in mind. I think peace of mind too. There are just some people who are constantly in fear of getting an audit. And as much as I don't love all of the commercials where they talk about how taxpayers leave money on the table, the reality is entrepreneurs do a lot because, as I mentioned in the beginning, you under-deduct. Sometimes having somebody who knows what they're doing look at your books and say, why aren't you claiming this? They save you money. They save you money for things that you might not have claimed that they knew. Maybe you qualify for a health care credit this year. Maybe the home office deduction you would have qualified for and you didn't know. Maybe, all kinds of stuff like that. I just think that, it makes a lot of sense. The other thing I will say, and this is my it doesn't matter how much money you're making comment, is if you do anything even a little bit tricky, something that you're not sure that you can figure out, maybe you're a Bitcoin trader or, maybe you're doing a lot of sales of individual artwork that you create and you're not sure what your basis is. Like all of those things that if you're doing and you genuinely they're tricky or you don't know what you're doing, I don't think there's a dollar value at all then. I think you get an accountant or you get a bookkeeper at least once to show you, there's folks that you can hire that will set you up on like a QuickBooks and they'll walk you through it and show you how to do it. Maybe that's who you need to pay. Maybe you can't afford to pay somebody to come in every week, but you can pay someone to come in one day and show you how to do it. Maybe to show you how to do your taxes one time. I think that, you know, there's value in learning how to do things from people who know what they're doing. And again, much the same way that you don't, you know, you don't cut your own hair, you don't diagnose your own, you know, GI issues. You rely on people who know what they're doing, and so I think you do that.
Yes, so very true. And I think some people get caught up in the idea that they have to hire an accountant for the whole year, but you can just hire someone to show you, this is how you use the system. I got you all set up. You can run with it. Call me with questions. But
right, and there's QuickBooks has an accountant's version, like an accountant's copy. So when you do your accounting, you can actually you can email your accountant a specific version of your account that they know what to do with. So, you know, you coordinate these kinds of things. And again, you ask questions, and if you meet with somebody and they say no, they don't want to do it, then find someone else that will say, yeah, we'll work with you. Because you know what? There's tons of really good tax professionals out there. There's tons of really good bookkeeping people. There's people that do it virtually. There's so many options now. You can find someone that is willing to work within your schedule and you know, and your parameters, and you can say, this is what I can afford to pay. And if there's somebody laughs at you and says no, then you move on to someone who, you know, who you can afford and you trust.
Right, exactly. Yes. I love QuickBooks. I've been using Xero mostly recently with the clients that I work with for that exact reason, because they want to be virtual and they think it's pretty. So we've been using that. But you're right. I
know a lot of folks who are fans, actually. A lot. Jody Paydar, I know. And like, there's a lot of people who are really good fans of those programs. So yeah.
Awesome. Cool. Question. You mentioned, okay, so say you're like, okay, I have a lot of things I need to go through. I'm going to go ahead and do the extension. And I paid around maybe $1,200 last year. I'm going to send in a check for that. If it happens that you owe more once you do your filing, is there a penalty for that?
Yes. There is an underpayment penalty, and there's also a penalty if you should have made estimateds and you didn't make enough. There are safe harbors. So like if it's your first time submitting an estimated and you just, you know, you didn't know anything last year, now you do, there's a safe harbor. So it's not like if you didn't know, you're going to get smacked. If you don't know every year, there's a problem. So usually the rule is you use last year's tax liability to calculate your estimated payments. If you don't pay at least that much, yeah, you could be subject to a penalty. So you want to, you know, using historical tax data is really important, and that's actually one of the reasons I like using an accountant or a tax professional, especially if it's somebody who you're using constantly or the same company they're using constantly, because they know you and you don't have to go through the let me explain to you what I did last year. They say, last year you owed $5,000. This year you need to make at least that much in estimated payments. Or you can say to them, I had a really terrific year this year, like twice as good as last year, and they can run the numbers and say, well, here's what you need to pay so you don't owe more. Or you can say, you know what, this is a really sucky year this year. and they say, well, you know what, if you're not going to owe as much, don't pay in as much on the estimated payment. So, you know, again, if you know somebody who is really familiar with your circumstances, it can actually save you a lot of agita, and as well as dollars, but agita.
Okay, awesome.
But you do want to watch out for those penalties.
It's for those that are kind of nervous about what those penalties could look like. Could you give us a ballpark estimate?
It's 25% of the underpayment is usually what you're looking at. So if you underpay by $1,000, it's $250. It's pretty easy math. And then the interest and penalty is calculated from month to month. So if you don't pay it for 6 months, because, you know, a lot of times, especially with entrepreneurs, you don't have the money to pay in April or whenever you're paying. So you can do an installment agreement with the IRS, and you will be subject to interest and penalty on that. It doesn't stop running, but at least you're making payments, because the worst thing is when you owe and you think, well, I can't afford to pay $1,000 right now, I'll make it up next year, and then next year you can't afford to pay the $1,000, so you're like, well, it's $2,000, but if I have another really great year next year, I can finally catch up. Most of my clients who are in trouble never catch up. Like, that's the problem. It's that they keep thinking it's going to get better, it's going to get better. And by the time it gets better, the hole is bigger. So if you start even, you know, IRS, it's funny. I think people think they're demons, and they're not. They do not like people who ignore them. So don't ignore them. They don't like people who are willfully evading them. But if it's genuinely that you just can't pay, most of the time they're really willing to work out a deal with you. In fact, on the online payment agreement, you don't have to talk to a person. You can literally go online, plug in your numbers, and as long as you agree to pay a reasonable approximation of what IRS thinks you should pay, like they say 200, you say 300, sorry, the other way around. They say 300, you say 200, and you agree somewhere in the middle, so you say, okay, we'll do 250. You don't even have to talk to a person. So, you have to talk to a person if you owe generally over $50,000 or if you have a really complicated situation. But if you owe over $50,000, quite frankly, you should be talking to a person because you need to figure out your options because it's rare that you can owe that much money in 1 year and then be current the next year.
That is really good to hear that the IRS, they're people. They want us to.
Yes, they are. Most of the time, and again, I've been working with them 14 years or so. Most of the time, people are really nice. It's rare that I get an agent who is rude. And you know what? I always tend to think of it when I have a bad agent that, I have 3 kids. There are nights I don't sleep. Everybody has bad days. So I just kind of chalk it up to they're having a bad day. Nobody gets up, I don't think, and thinks, how can I make a taxpayer's life difficult today? So as long as you're respectful and you're nice and you understand they're trying to do their job, most of the time they're really nice back.
Cool. And so if you do want to do the installment plan, definitely set yourself up so that you can try to finish it out through this year.
Yeah, well,
next year.
Right. Well, that's the other thing. You want to pay enough to make a dent in it, but you don't want to pay so much that you set yourself up for failure the next year. Because the idea is if you owe money, to be compliant. So if you know that you're going to owe $10,000 next year, and you had a really hard time paying $10,000 this year, don't tell IRS you can pay $2,000 a month when you can't. Make sure that you are taking into consideration your upcoming liabilities as well. Because again, especially my folks that are freelancers and they get the 1099s, that's the biggest thing I see is that they think that they're going to make it up. So, I'm going to write a check this year and I'm going to try to get a little ahead. And then you realize, well, maybe I can't. I'll just hold off on it. I'll write it next year. And it just gets worse and worse. And then by the time you go see somebody like me,